And we're recording now. So
Perfect.
here we are. This is part two of building a brand engine. A growth engine for brands and businesses. I'm here with Patrick Dickinson, who obviously we started with part one, and we were talking about business growth. And it was about the scope of the business growth at the very beginning. And now today, what we're going to do is talk about the 8 different buckets in which we look into to find growth, opportunities for growth. So Patrick, over to you. There's a framework that we need to go through to understand where do the 8 buckets come from and how do we start?
Yeah, absolutely. So, and this is something we like to do sort of right off the bat with clients is take them through the kind of following little sort of graph, and which shows the basic outline of a growth strategy and where it fits and sits inside your overall business strategy. And we talked about a couple of things last time that or touched on them, and I thought this chart kind of makes it a little bit clearer maybe for people who are following along at home. So if you bring up that chart, what you'll see is we have the typical pyramid that starts at the very top with there's your company and it's your strategic purpose. It's why you exist. But then that breaks down then into the components of success are your positioning and your strategic growth. So like the positioning is the very initial sort of like what do you do and how do you compete in which markets. And the strategic growth then is that divides into a couple of different areas. And just before I get into growth, because you asked last time about marketing and is marketing a driver or a follower of this process, sometimes it's a little bit of both, because as you can see, that strategic positioning is really over and it resides above the growth, your growth strategy. So what that means is your brand positioning should be set. It should be compelling. It should be understood within your company. That's a little bit of price of entry for going through the process. Now, is it always, written out in a beautiful statement that the whole company can recite by heart? Not necessarily. And sometimes it's worth the time to kind of go through that. Sometimes the positioning is well understood, but just needs a little bit of sharpening, as I call it, to make it a little more competitive, a little more compelling. So, but we don't necessarily spend a whole lot of time on the positioning because we need that to be right in order to do the growth workshop. And the growth workshop, then when we get into it, there is your strategic growth, and that's more of that M&A world in the blue there. So if you want to go out and buy companies in order to generate your growth, that's a legitimate way to do it. It's a little bit, it's that kind of more predatory or consumptive way that a big company would, look at smaller companies that might be innovating in the space and pick them up and add them to their revenue pile. And you were talking about that in the live version. That's legit as well. But the organic growth, the nice thing about organic growth, all those green boxes, is they exist. Those opportunities exist in every business. Not necessarily every single box, but a lot of them do. And organic growth breaks into the two branches of business expansion and innovation. The two kind of big buckets, and it breaks down from there. And the way they break down in business expansion is, there's market expansion, or there's market penetration. So, it's like, is it a new market, a new region, a new type, or increased penetration within an existing market? All of those ideas come out of that business expansion, and the tactics kind of tend to fall in those 4 buckets. There's different ways of organizing these, but I find that's a cohesive way of kind of organizing them. On the other side, we have innovation, and innovation, when we think about that far right bucket of revenue optimization and cost optimization, we don't sometimes think about innovation, but it is innovation in a way, because you need to kind of develop new tools and tactics in that area in order to do some of those things. The traditional version of innovation is that product innovation, and that is, either a new product or a product extension a line extension, a functional upgrade, an improvement to an existing product. All of those fall in that product innovation or service innovation bucket. So though, when you go through this exercise, and we talked about this last time, I often share this chart with people after I've asked them, just give me your top of mind ideas, because everyone carries around with them, I think we should do this and I think we should do that. And so it's interesting. You'll get lots of different ideas, but again, they'll tend to cluster in some of these buckets depending on the type of business.
And so this exercise that you're talking about, people are coming to you, they've got a bunch of ideas sort of that they're walking into the room with. How long does it take to go through sort of getting everything onto the table and getting them, you know, sorted out into each bucket so that we can, so that the executive team can look at them?
Well, in the original, an initial sort of brainstorming that you go through, we're not necessarily looking for an enormous amount of detail.
Okay.
We want to know that we can add detail in, like that we can standardize those ideas into a fairly standard format. And that format is a realistic revenue number, and then a realistic obstacles, tasks, or the requirements that are going to have to be delivered and or overcome in order to deliver that revenue. So you kind of have to get them into a standardized view.
Mm-hmm.
And then that might take some time, not necessarily in the room, outside of the room. And the other one is those assumptions that you make about revenue and the assumptions that you make about cost, you need to make those hard. So you got to get as close to a real number in both of those, the revenue and the expense required. So after coming out of the room is where you spend a lot of time saying, somebody said we should sell more coffee cups to in Saskatchewan. Okay, well that's pretty good, but what would you have to do that? How much is that opportunity? So you do a lot of that afterwards.
Okay.
And you scope you try to give a scope to the size of the revenue, and also the tasks that you have to go through.
Mm.
And
So
then
there's a sort of a layer below the tactical level here. Like you've got the 8 tactics or the 8 buckets. There's a layer below that, which is like validation or
yep,
triage, where you
yep,
need to have finance, you need to have some data, you need market research,
yep.
marketing.
Everything on that left, you would need some kind of research for, typically, whether it exists in the company as a part of an ongoing tracking, or whether if it is a new market or a new demographic or a new region, you need to understand that with
Mm.
not just top of mind stuff.
Mm-hmm. And of course, this is an area where you need external data. You can't just focus on your own internal data. You need to project it against a universe to find out, like, where's my gaps, where's the new market, where's the new
Right.
demographic or region or whatever that actually is going to take that bucket and sort of get down to the next level of how much growth is on the table here and how much is it going to cost us to go after it.
Right. And your point about evaluating gaps, a lot of this part of the process is more just is also to show people how wide the opportunity set can be for
Mhm.
any business, beyond just because what happens is the familiarity bias of most businesses will be to grow the way in which they've always grown in the past. So
Okay.
whenever we've run into trouble, we've just introduced a new whitening formula to the toothpaste, or we've always just put more money into the marketing and we've been able to expand the market that way. There will be, they will cluster into those types of growth that have served them well in the past, which is fine. But typically there's more available, and it might not be getting an apples to apples evaluation.
Okay. So it forces people to get out of that comfort zone and say, there's areas over here that need to be evaluated. They may not play out, or they may play out, but you need to spend some time here.
Yes.
Yeah.
Yeah.
Okay.
And when we do spend time here, just the last point I'll make here is, there might not be anything that occurs initially, but then when you look again at those buckets and you apply things like regulatory changes, have regulatory changes thrown up some opportunities, technology changes, distribution changes, supply chain, like competitive changes in the marketplace. So you look at them, and then you look at them again, and then you look at them again, and every time you kind of look at them with a different lens, sometimes different opportunities pop out of that exercise. So the brainstorming is kind of a robust and rich sort of conversation, and quite often, you're writing as fast as you can just to get down all of the items that start to pop out.
And so, I mean, this is what you're doing with the growth office is this is the framework that you take people through, and
Mhm.
and it must be actually a lot of fun to be going through the with the executives popping up these
Absolutely, because
ideas.
I mean, you come out of this meeting with the executive typically much more optimistic and energized about their, the opportunities in front of them than perhaps coming in. And a lot of that is maybe, someone on the team might have a passion project that, hasn't been tabled before.
Got it.
And it just makes sense to everybody. And it's like, yeah, why don't we? That's a good one. So it gives people the opportunity to kind of unburden themselves of their, their hidden idea as well.
Yeah. Okay. And so then what happens? Like how do you sort of look at these different growth opportunities and categorize them?
Well, when you take those sort of 8 at the bottom, I'm sure you could put even finer degrees of separation between them. But the reason that I like these 8 and I work with them is that they also cluster in a different way. And if you go to the next chart, you'll see the way in which they cluster. And all those ones on the left, those business expansion ones, which is increasing penetration, which is and that is kind of often the first instinct of many companies is like, hey, we just got to get more business from the people that we are already talking to, which is legitimate. It also has the advantage of being fairly low risk, other than money in, but you're not going to change your messaging. You're not necessarily going to, you're basically saying go get more. And then the other one's new market segment or a new market type or a new market region. If you press the button, what happens is McKinsey a couple of years ago had another way of looking at these 8, and they grouped them. These 4 types would be investing. And it's investing because it depends upon an existing product or service that has proven appeal. Ideally, it's got proof that it has driven some growth for you in the past. And you're just going to add money to that notion. But what it requires, going back to our earlier point, is knowledge and specific knowledge about what you are going to enter. So
Got it.
if it's against a new demographic, what are the what are the attributes of them? What are they looking for? All that stuff. If it's truly a new demographic, you won't know what you need to know. If it's truly a new region, you might not know what you need to know. A geography, an extension, all those things are typically going to need a research component. And the way we decide about how to invest in the research going forward is, well, comes back to that the triage we just did in terms of the size of opportunity and the obstacles to get there. If it's worth it, it's absolutely worth going out and getting research on the market, the demographic, the type, the distribution that we're looking to use to expand our business.
Mhm.
And where you see like the types of businesses that always cluster in here, all service firms are very, very focused over here typically, and that's law firms, accounting firms, wealth management, private wealth management clients, anything in the marketing services area. So advertising agencies, design agencies, a lot of stuff is in that, because that, another word for that in those types of businesses is just the new business. What is the new business plan? What is the new business marketing plan? So some guys already have, they are very focused on that already. But even those service firms, and typically, this gets filled up, but they haven't looked at a new type of product or a new type of service. They haven't looked at things they can do to their internal cash management or accounts receivable or payable management. So again, everybody clusters where their familiarity bias takes them.
Got it. So this is really like sort of the area of sales and marketing, the sort of, if categorizing that type of people, is it they're in the investing area.
Yes.
Okay,
Yep.
well, let's talk about the creating area then, because
So the
that's
creating bucket is an interesting bucket, and it's all that product development. So it speaks probably to people who have a product development capability, and the assets to affect that. And if you're service, it's a service offering extension and the support that is required to offer that. And interestingly, of the three buckets, that McKinsey research, when they talked to high growth firms, and the high growth firms were self-identified, but it was 4% above market growth, which I think is a pretty healthy kind of growth standard, at least for legacy businesses, maybe, kind of outside the tech world, which is all plus 30 every year, but plus 4% above market growth is good growth.
Yeah.
That companies that tended to focus in this area were the most likely to be amongst those high growth companies.
Got it.
If they were focusing on just one of these three territories, the creating bucket was the one that typically companies focused in that area were higher growth. Now, the reasons why they don't supply, but my theory, having looked at this a few times, is it's the nature of the investment, and also culturally, or at least collectively from a management standpoint, how those things roll out. So when you think about the creating bucket, two things happen. The investment tends to be much more upfront. So when you take on the objective of a new product or a new service, you have to spend money to make it. And when you spend money upfront on any project, you are much more likely to carry it through. The other thing that this creating bucket comes with, almost like pre-made, is that culturally you tend to start these projects with a cross-functional team in place. So you've got the product developers, you've got the marketers, you've got the finance guys, you've got the operators, you've got all of the people required, typically sitting around the table saying, we're going to launch this product. And right from the get-go, you've got a cross-functional support team involved. So lots of hands, holding this one up right from the get-go. That also makes it much more likely that it's going to be followed through and delivered. So for both of those reasons, the upfront investment, and you're starting with a shared responsibility almost out of the gate, that makes that one a really compelling thing, a really compelling bucket.
Right, which comes back to the sort of the session of you've got your executives in the brainstorm. If they're focusing on the creating area, you're sort of firing on all cylinders to get everybody involved in finding out where that new market is going to be for that new development.
Right. It presupposes that you're going to have to develop that market at the same time a little bit too. And then the last bucket, the thing about that performing bucket, which is revenue optimization or cost optimization, some people don't see that as growth. They see that as something the CFO kind of enforces on the company. It's like, we're going to go on an expense hunt now, or we're going to go on a, I want revenue optimization in terms of bringing the accounts receivable faster, all that. So, but it is growth. It is legitimate. It's legitimate growth, and it's a legitimate way to approach it. It should be balanced with other things. But sometimes people think that like going through an expense control process, and we've all been through those, is not a legitimate sort of growth option. It can be. The problem is when it becomes exclusively the territory that a company focuses on. And what tends to happen in terms of size is the larger the company is, the more likely you're going to gravitate to that bucket, because the sums involved are going to, the bigger the sums you're spending and making, the more likely by shaving and tweaking and increasing the efficiency, you can squeeze money. You can squeeze additional money or margin out of that whole thing. So the bigger the company, the more likely you're going to get into that performing.
Interesting. Okay. So, I mean, this is something when we talked about it last week is when we talk about growth, is what do we mean by actual growth? Is it growth in revenue, or is it growth in margin, which are two very different things? And this of course creates the framework that says, what are we actually meaning when we say growth? The other thing that kind of occurs to me here is just sort of how much importance is put on the data layer of something that combines against all of those things. Because if we're talking about growth in a market or growth against a demographic on the investing side, you have to have that sort of data outside the company, to understand what the universe looks like outside the company to to bring
Yes.
that in. But on the performing side, you can be taking some of your, let's say, your marketing data or some other of your expense data, and say, let's do an analysis of the data to ensure that we can grow that margin, through the evaluation of, let's say, some of the media funds or the media spend, which tends to be one of the larger parts of the spending.
Yep.
Of course, then there's the creation side, right? Like, what are we creating it for who? You need to be able to do some market research there to understand what people want.
Yes, yeah, you do. And your point about investing in performing is absolutely true. But I feel like the reason why sometimes if you are a company that is focused on those buckets, and that tends to be where your growth initiatives comes from, um, I think it's more likely that like you can lose momentum a little easier in these buckets. You know what I
Okay.
mean? Like, because they are, it's just money. You haven't physically created a new product, so it doesn't get as much buy-in, and also depending on how those things have been sold to the rest of the company, sometimes it's just somebody's responsibility to figure out a market in the investing bucket, or it's the CEO and the finance department's responsibility to give us some new AR management tools and things like that. So because they're segmented away from the kind of general population, sometimes, again, the potential for them to kind of lose momentum and go forward is a little bit higher.
Sure. And I got to believe there's like a short-term, long-term sort of a effect, right? I mean, one of the things is if you're in the performing area and cutting back and trying to, manage a margin, you might be sort of pulling in short-term dollars at the expense of longer-term investments of markets that need to get developed.
Yeah, and we try to evaluate the nature, like the money that comes in. So the money that comes in is also kind of rated and ranked. So like it's not just the total value of the dollars like
Right.
that's coming in. It's how quickly would you expect to be able to recognize this? For a lot of like small to medium enterprise companies, that's just as important, right? If I can get $10,000 today, it's worth much more than $20,000 in 6 months' time.
Got it.
So that's one. And then the other piece that we tend to look at when we start to evaluate it could it be recurring revenue? So is this a one-off where we're going to get revenue, or is once we have uncovered it, is it a stream of revenue which will reoccur over time? So obviously both of those things, if it's fast and if it's reoccurring, or either one of those, that's worth more. That money's worth more
Got it.
than the one-offs.
So you essentially you've shared sort of like sort of the very beginning of the process that you take your clients through in this sort of growth framework part. Three slides that we've gone into, but it sounds like that there's a whole sort of raft of stuff that happens after the initial 3-hour brainstorm, getting into the 8 buckets, and then sort of how long does it go on for? How that you're involved in this process?
Well, we want to move quickly, but so it depends on like a couple of things. Number one, how many legitimate opportunities do we want to evaluate? Because
Okay.
every legitimate opportunity you want to give you don't want to give anything short shrift.
Yep.
So if it's legitimate, which means it has an actual revenue target, there are specific tasks or objectives that we need to overcome or complete in order to get there, and we know what those are. If we can look at those, then that's standardizing it to a standard format. That's number one. Number two, then that evaluation process adds in a whole nother set of evaluations that we bring to bear on those opportunities, which include not just the revenue value, but we start to bring in other little more qualitative things like is there a clear end benefit for the people you're selling it to? Would your market be really chuffed by this? Is there competition in this market or not?
Mhm.
Are you prepared and aligned to be able to deliver this without additional expense in terms of capital or labor? So there's a whole set of then kind of metrics that we use to rate and rank. We apply them, and then what happens is where you have high value as defined by both revenue as well as client value and market value, and where you are very prepared and aligned to do it in terms of it's not a whole lot of extra cost and extra labor, and it's maybe not as competitive a market as we would suspect, then prepared and aligned, good value, boom. That then becomes your 1-1A. Let's go get that.
Sure. And is that something that you're part of the execution of, or are you sort of like, as a multi-phase, like how does it work for you?
Well, where we get to is
Yeah.
we get to that the resolution of the whole thing is that we want 2 or 3 or 4 strong, very likely to be able to execute revenue generators, incremental revenue generators. So as soon as we've done the work to say these are the 3 or 4 that we believe, and the one thing I didn't mention is that the one of the key insights from that McKinsey study was that companies who have tactics in each of those 3 buckets, the performing, creating, and investing, they're actually much more likely to be in the high growth territory. And
Yeah.
that's probably just a function of, they've got the practice, they've got the culture, and they've got the sort of consistency to do it. So, that's the main thing is once you get to the 2 or 3 that you want to do, then it becomes really project management. Now, that project management has to be internal, but we give our clients kind of the tools to sort of, here's the milestones that you should be checking on over time. And then we'll come back and we'll help to, when obviously if there's roadblocks that get run into, the nice thing about the sort of having, if we came up with 20 or 30 of those, you're going to have your top 2 or 3. If you run into an absolute dead end on something, you've got lots of other ones, perhaps that need a little bit more work to get into the appropriate shape to pursue, but you've got more alternative sort of options that you can then just bump up and move forward with.
Got it. Okay. And so that gets you through the 8 buckets. You've taken the clients through the brainstorming side to develop the tactics. You've done the triage to understand sort of what the value is and the ability to execute. You've chosen some that go across the whole team, and then they're off to do their own project management and stuff. So how, just finally last question would be is, from start to finish, about how long are you involved with this sort of
Well,
process?
it really depends on the company because honestly, like with everything, when you're kind of an outside consultant working with an executive team, their time is valuable. So a lot of it is just kind of having access to their team and,
Yep.
and you don't want to make it taxing on them. This isn't something that everybody's spending hours and hours and hours every week on. The idea is that it's small, intense amount of hours for, getting everybody's thoughts on the table and then working with individuals within the company over the course of 2 or 3 weeks. So, I kind of give a week pre the workshop, 2 to 3 weeks to kind of standardize and get those triaged as your word, which is a good one, to and standardized and try to evaluate them. Come back and say, here's that initial evaluation, and then the rating and ranking in terms of these are the ones that are popping up to the top. Usually there's kind of a fine tuning phase because once those are brought back, there's people who may agree or disagree with some of the assumptions you've made. So you want to definitely tighten those up. And that can take a couple of weeks to get there. And then, once you've got the final, it's really coming back with that kind of project management and milestones. So potentially, I believe I have done it in 6 weeks. I think more realistically, it's about 2 months from start to finish. And then if you're, if it's a real big complicated company and you can't get meetings with anybody, might take a little bit longer. But the idea is that our templated process should be 2 months.
Got it. Okay. Well, I think we're at about a half an hour, so I think I'm going to let you go. But I thank you so much for your patience with the earlier issues we
Oh,
were
and
running
yours too. I don't know whose end
into.
that was on.
I think that this is a fantastic way of understanding how growth can be applied to any business, whether you're a startup like us or a mature business that's trying to figure out the balance between acquisitions and sort of organic growth. Again, it's super helpful to just be able to communicate and put things into the right bucket and get everyone to understand what is it that we mean when we talk about growth.
Yeah, and to your that, I'll come back to that because that was something we talked about at the very beginning of part 1, which is,
Yeah.
The process itself, one of the key values is that growth culture. It's the alignment of the executive team. So you're using the same language.
Yep.
We're using the same kind of goalposts and standards. Like the objectives are the same and they're shared out, and everyone understands who's doing what. That is a big piece of this too.
For sure. Yeah. Okay. Well, thank you so much, Patrick. I really appreciate it. And again, we'll be chatting at some other
More
point.
in the future. Absolutely.
Yeah.
Okay. Thanks,
Okay.
Chris, and good luck.
Okay. Thank you. Cheers.